on blockchain and cryptocurrency, hype versus reality. Before moving forward, I acknowledge the traditional owners of this land and pay my respect to their elders, past, present, and future. Over past few years, cryptocurrency and blockchain space has become one of the most attention-getting industry in the world, and it has grown rapidly on a global scale. Today, we are having Shew to talk about what is hype and reality in this domain. Joy is a founder of Crypto Consulting Institute Australia, which is a leading investment education business, and it has been operating in different countries. Joy is a well-known speaker in the crypto world, and he has given many talks on national and international TV channels. He has helped hundreds of clients to achieve life-changing results with his proven 5-pillar investment crypto system. So let's welcome Shew.
Awesome.
Over to you, Joy.
Yeah, good, mate. And one thing that I do want to say as well, I've got one of the incredible team members, Sam, alongside with me today that you might be able to see.
Hi, everyone.
So Sam is our head analyst at CCI as well. And I thought there would be great value in bringing Sam on into this conversation too, because he's got a lot of insight and wisdom that pairs really well alongside what I do over here too. So I do want to say it's not just myself on the line here, it is also Sam, who's a wizard within our team, and he's the one that really runs the ship. I'm just the face of it.
Thank you, Joe. Appreciate it. I'm super excited to be here, guys. Thank you.
Awesome. Nice one. So Salim, do you want me to just kind of run through some insights, or how do you want me to approach this? Because I'm super flexible. I can do anything, really.
Up to you, Joy.
Yeah, easy, mate. And the only other question I have before we do get started, in terms of the audience and people that are tuning in, what kind of level are they at within blockchain? Shall I assume that they have no knowledge and no experience, or am I assuming they're maybe a bit more advanced? Where are they really at?
I think you could ask a question to the audience.
I think you can start with a little knowledge of the audience, so that would perhaps be a good start. And if we are missing something important at the advanced level, we can always organize a second follow-up talk separately and get the remaining stuff covered up. Is that a good way to think, Sasha and Suryani?
Yeah. Sounds good to me. Awesome. Well, let's just get started and get into it and have a bit of fun. And you can give me any guidance that you feel that you need to. I think that's probably the best approach from here. So for, I guess, a lot of people that are watching this right now, there's a huge amount of excitement within the world of cryptocurrencies as in general. And I would say the thing that's really caught people's attention more than anything, to be quite frank, is probably the fact that people are making a lot of money in the space. That's the reality of things. Unfortunately, our world is kind of geared and channeled towards the excitement of money, and it operates behind money. So when people are seeing that there's an investment vehicle that is far outperforming anything that we've ever seen in terms of asset class, in comparison to anything else we've ever seen in history, and it's outperformed it 10 times over consistently, almost year on year, it's no wonder that it's got a lot of attention from people. It's no different, I think, to explain it really easily, because there's blockchain and then there's cryptocurrencies that are developed on top of it. It's the same as kind of the internet and then the businesses or the developments that happen on top of the internet. It's a very similar way to kind of describe it. So blockchains, the big transition that we've gone through and why blockchains have become so prevalent is really because at some point in time, we were transitioning through more of a centralized way of operating, meaning there's really few people that have a lot of power, and they were kind of conditioning and controlling the way that everything was kind of done. From even governments to, if you think about banking or any kind of sector in the world. And what we started to see was the desire to have a transition to a more decentralized way of operating, more decentralized function effectively. And from there, the shift and change started to roll out more and more. Things like cryptocurrencies are not new. Cryptography has been used for many, many, many years now, and even cryptocurrency-based currencies have been used for a long time, well before Bitcoin. So you have to look at things like DigiCash from David Chaum, which has been around for, I think it started in, was it 94, 95, something like that. Correct me if I'm wrong here, Sammy. So it's not new, but the one big problem that older cryptocurrencies did not have was a blockchain. That is where things were challenging. So as an example of that, the double spend law. The double spend law on a digital or a non-digital sense. Imagine going into a cafe and spending $10, but then being able to go and spend that $10 somewhere else at the same time. It's just something that it doesn't work and it shouldn't happen. But because there wasn't a blockchain in place, that allowed for a double spend, which was a bit of a challenge. So the transition of blockchain technology, what this has effectively done is it's tied in each and individual transaction that's ever taken place, and it has to be validated and verified by the entire network in order for it to say, yes, this is a legitimate transaction, which effectively eliminated double spend straight away, which was an incredible thing. Then it's the same as the internet. The internet was, you could say, it's built for email. And email was obviously a great application of which is still used today, but there's so many other applications that have been built on top of the internet now, and it's the same as the blockchain. So Bitcoin, the blockchain that started out, people were looking at as Bitcoin, this is it, but then they start to realize, hey, hold on a second, there's this underlying digital public decentralized ledger, because that's what the blockchain effectively is, that can now be utilized in so many different capacities. So that's why we saw the transition out of Bitcoin to all of, well, I guess the existence of all of these different cryptocurrencies out there in the market today, which all serve an incredibly different purpose. So if you think of any business, so if you think in the world of business, forget about cryptocurrency for a second. If you think about business in itself, with business, there's so many different businesses out there that run completely different things, from construction to health to education, whatever it is. They're all very vast and very different. But within specific industries, there's companies that run and do exactly the same thing, and they're competition. And that's the same as the world of cryptocurrencies. If you look around, there's ones that are facilitating payments, data storage, even with health and property. It's very, very vast now. And cryptocurrencies is just booming across every single sector around in the world right now that we see. And if one hasn't already been, I guess, shifted and changed to accepting Bitcoin, or not Bitcoin, sorry, cryptocurrencies as the adoption and the blockchain, the underlying technology, then they will be affected in the very near future for sure. Otherwise, they'll be left behind. And that's obviously not what they want. So we can start to see the real development that's laying out and the growth of the space. And it is just phenomenal to think that just over 10 years ago, we started with one, and today we've got well over 10,000 different cryptocurrencies that are out there. And a lot of them are serving different purposes. A lot of them are trying to serve a similar purpose, but improve and iterate and alter on. So I'll give you an example of that. And again, feel free for anyone to give me a bit of guidance or ask any questions as I go through this, and maybe say, Joe, pull back, I don't understand that. Give me a bit more explanation, because this isn't about me, it's about you guys really understanding this and being able to take something tangible in terms of value away from this. So what I would say is, if you think of Ethereum, now Ethereum was designed and created and developed as a blockchain facilitator for people to be able to go and develop and build on top of their network, on top of that blockchain. So they can use the blockchain, use the technology that they've already created, and then build on top of that. So they don't have to build and create their own blockchain. So you might think of this I guess the example might be something like Apple App Store. Apple App Store is providing the facility for people to not necessarily develop and build on top of, but they're using their system and what they've created to sell that app through. So it's somewhat similar to Ethereum to an extent. Now, within Ethereum, there's a number of different competitors. So you've got things like Algorand, you've got things like Cardano, you've got things like Polkadot, which are all somewhat similar in their existence, but they're trying to achieve and improve and iterate and alter on what's already been delivered. So that's kind of one example. Another example, because we've gone through so much development in crypto in such a short period of time, another example of this would be something like decentralized finance, or also known as DeFi, which has become a really popular trend, more so started a couple of years ago, but it's still building and developing now and here on in. So the way to think of DeFi, it's almost like earning interest with the money that you have within your bank. So if you've got money, you go and put that money in the bank, then you can earn interest on it. Within DeFi, if you own crypto, you can kind of put your crypto in a bank, which you still store in a wallet, and then you can go and lend that out to other people and make interest on it, because that's what the bank does. They're taking your money and they're lending it out to other people, but the bank are a little bit sneaky. The bank do something what's called fractional reserve lending. So if you put $1 in the bank might lend out $10 from that $1. So that's why when there's a run on the bank say, sorry, we don't actually own your money, because they've created fake money out of thin air. Which is a consistent theme with what you'll probably see over and over and over again. An example of that would be the amount of money that are continuing to print from all different, I guess, areas around the world. If you look at the US, I think the US printed 40% of the entire US dollar in existence in the last 12 months. If you go and look at the Australian dollar right now, you can go and see how much they've printed over the last, I think it's since January, the amount they've printed. Sam, you know the figures behind this.
Yeah, well, I know the 2 months, so the last 2 months, the RBA's printed $200 billion. So they've added that to the monetary base in just 2 months. And we know we have the largest housing bubble in the world. So again, that's going a bit more advanced, but it's to keep those yields of mortgages down and just stop a bubble bursting. So we're just going to keep doing that.
Yeah, absolutely. And it's almost like their solution to the challenges is, sure, let's just print more money. But the thing is, the basic, if anyone understands economics 101, the basics of the supply and demand law, if you continue to increase the supply of something and then the demand isn't there, then the value of it will diminish. And I guess I'm going to come back to DeFi in a second, but I want to kind of pull back to the existence of currencies in the first place. So if you think about currencies and how they were created, it was just a way of storing value in an item that you could then have agreement between a community of people that this item, whatever it is, had that agreed upon value, and then you could transfer that value for goods or services or whatever it was, because gone are the days of, I've got a cow and I need your grass or your grain, and the person turns around and says, well, sorry, I don't actually need your cow right now. It didn't work. So they looked for different stores of currency effectively within it, and that's why currencies were created. And then from there, we saw the transition of shells to stones to gold, and then into paper money or paper note to say I've got this gold in the account, to paper money, and then through to digital money, and now we're into cryptocurrencies. The big thing that happened within traditional currencies is they used to generally be backed by something. So instead of just printing money out of thin air technically, which is what happens now, the existence that we had before in traditional money is that it was backed against something. The Great British Pound, where pound comes from, it was a pound of silver. So 1 Great British Pound effectively represented 1 pound of silver. 1 Great British Pound today in comparison to 1 pound of silver, I think the value of 1 pound of silver is about 188 pounds. So you can see it's lost 99.7% of its value. If you go and look at the US dollar and how it used to be backed against gold, that was effectively the reserve that most people, most countries around the world were using. They were pegged against gold. And then the US turned around and said, in 1971, Nixon said, sure, we're just going to de-pair it against gold. And in that transition, if you actually go on Google and you look at the value, and Sam, maybe, I don't know if I can pass you, I was going to say you can pull up the chart, but you can just go on Google yourselves and have a look at how the US dollar has diminished in its value against gold since the de-pairing in 1971. And the thing that scares me about the monetary system that we're in right now is you only have to go and look at developing countries like Zimbabwe and Venezuela, where they've printed money out of existence and they have $100 trillion notes that are not worth the value of the paper they're printed on. And in order to go and buy a loaf of bread, you need bricks of money one day, and then the next day, because of hyperinflation, you need a wheelbarrow. So there's a real disparity between that. And that's effectively where we're moving to right now. If we continue to print money in the way that we are, it's a real, it's a dilemma that we're going through, and it's a band-aid on an axe wound, which is not a solution. It may be a solution in the immediate moment, but if you look forward 5 years, 10 years, what's the ramification and impact of this? It's going to be an absolute game changer. And what I might do is actually hand over to Sam as well at this point, because I know that Sam would certainly be able to share some insight and other thoughts on this as well, because this is, I guess, his arena and expertise too. So Sammy, anything else that you want to share on this specifically before I go back to DeFi?
Yeah, I guess I had a couple of points that I could just raise just to sort of formulate the position on why I guess this is becoming more popular, and there's a bit of a group consciousness wake up to blockchain and Bitcoin specifically at this stage. And that's what Joe said before. It's about the unlimited money printing we're seeing. And when I say money printing, I really mean QE. And it's what the US government, or the Federal Reserve in the US, has really pioneered. They've printed a heck of a lot of money in a very short amount of time. And it's really getting people to start asking a lot of questions about, well, if you can just print money, to infinity almost, well, why are we paying taxes? Can't you just fund all the infrastructure we need? Does it just keep going? So there's been a lot of talk about that. And there's been a lot of thinking about how to preserve buying power. We're seeing our own buying power in Australia slowly get lessened and lessened as money printing goes on. We see the incredible price of housing. And maybe a lot of people watching this will just start scratching their heads thinking, how the hell am I going to get into the housing market? And we're just seeing that buying power, the purchasing power of our currency, of fiat currencies, just lose that store of wealth that we've been accustomed to. In the West, we are privileged in many ways because we have never experienced what Joe was saying in Venezuela and Argentina, and now to a degree, Turkey. I mean, the dominoes are starting to fall with these currencies being devalued and losing that purchasing power. And they're all either looking for the gold alternative, or they're looking for the Bitcoin alternative, or they're looking to potentially go to US dollar backing. So that's kind of where we're going in the macro sense. So there's a lot of things at play. And then we've got other things like negative interest rates. People are searching for yields. They're looking at their savings account and they're seeing 1% or less. In some developed countries in the world, in Europe, it's actually negative. So, you're looking for ways to try and create, money. It's disincentivizing saving. So we're seeing a lot of people look to take risk. And that's what you're seeing at the moment with the inflated stock market. It's what you're seeing at the moment with cryptocurrency, is people are looking for yield and they're prepared to take more risk to try and get ahead of this inflation curve, which we potentially know is coming. And also as well, there's this friction with the current banking system. You'll see, you want to go into a branch, most of them are closed. You want to make a transfer, you might have to wait a certain amount of business days for this to kind of happen. Digital currencies and blockchain are just faster, easier, and the sentiment as well is against the banks. So sentiment is a really big driver of what happens in trends. And the current generation, say millennials and moving up as well, they're looking at banks with a lot of distrust. And anyone with a smartphone can interact with blockchain and cryptocurrency. If you just think about it like that everyone is just getting more and more interconnected with technology, you start to think, okay, this might have some legs, and we're probably looking at a broader trend that's just going to keep going over the next decade, if not longer. And just finally as well, we've probably noticed it in our lives generally. I know it when I go down to Adelaide Oval and see my beloved Adelaide Crows play here in SA. but you'll see that they have gone totally digital, and they'll say, we don't accept cash here anymore. It's just digital payments. So even though they are using the Australian dollar or a fiat currency, it still gives you that thought in your head, and also helps that consciousness awakening, thinking, well, we're just going digital. Are we just storing units of account on our phones now? Does this have any value whatsoever? So I guess that's what maybe I'll add to the point Joe's just so succinctly made. But yeah, I think you can really clearly see the trend of what's happening in the world.
Yeah, natural progression is probably how I would point that in. So absolutely, and thanks for sharing that, Sammy. So coming back to DeFi, and the reason that I talk about DeFi is the evolution of the space that we're going through right now. So if we look at DeFi in itself, with DeFi, that's the ability to lend out money that you have effectively within cryptocurrencies themselves. So if you think here, you've purchased a certain amount of Bitcoin, Ethereum, whatever it is, and now you can put that to work and gain interest on that by lending it out into a pool where people can go and borrow money from that pool. So instead of having to go to the bank to borrow money, you can literally go to a pool and know exactly what your interest rates or what your repayments would be, etc. But it also incentivizes and rewards someone like ourselves who's held an asset, and they've got the ability to lend that out into the market. And right now, the incredible thing about this, we talk about banks and the return from interest rates. In some countries it's negative, but in most countries right now it's extremely low. The benefit of this right now, if I use a DeFi platform, I can actually purchase something like a USDT, or maybe not USDC, let's say. I won't get into that right now. I know Sammy's laughing, but let's say USDC, which is just a stable coin which is pegged against the US dollar. Effectively, they operate in a way where it will stay flat to $1 US. And you can lend out your cryptocurrency, your USDC, which is equivalent to $1 US. You can lend that out and right now get 8.6% return APY. So why would you put your money in a bank? When also, I'm not sure if anyone's aware, but we actually have bank bail-in laws in Australia, which, believe it or not, got passed on Valentine's Day, when not many people in the courthouses, the hearing behind it. And effectively what a bank bail-in means is exactly what happened when the Cypriot bank bail-in happened, I think it was in 2013. If a bank collapses, they can go to the holders of the bank and take a certain percentage of their holdings that they have. So instead of a bank bailout where the government will bail them out, a bank bail-in is where the people that actually hold money in the bank, they are due to pay a certain percentage of their holdings, which you have to be over a certain threshold in order to do it. I think there's a minimum to it. But you're due to pay the bank for their wrongdoings and their greed, which to me just blows my mind, the risk associated with that. And I know in Australia we are insured, I believe, up to 250k maybe. But to me, the risk of that is just tremendous. So it's not only people are investing in cryptocurrencies for volatile assets and appreciation of the value that they have, but people are also doing it to move away from a high risk system like our traditional monetary system right now, with all the challenges, the greed, the fear that's going on. It's, to me, honestly, when people say, but cryptocurrency is risky, I'm like, you need to wake up. Our traditional system is risky right now. Can you not see that? And this is why we do what we do. We're trying to educate and help people to understand the risks associated. Yes, there's risk within cryptocurrency, don't get me wrong, and I will absolutely outline them for you, but there's a lot of risk within traditional markets right now, and that's why people are transitioning across. For me, we're going to look back on this time in history, which will be far greater than the dot-com. We will look back and say, wow, imagine being there at the inception of cryptocurrency and the biggest transference of finance, but not just finance, but every kind of industry transitioning away from a different economy and a different way of operating. It really is that significant. So coming back to DeFi, because I know that I kind of run off in these thought bubbles and I want to make sure that I'm on track still. DeFi is simply the ability to lend out money that you own and be paid for that, but the interest rates on them are absolutely incredible in comparison to storing your money in a traditional bank, which there's absolutely risk to that. Before I move on, Sammy, is there anything that you potentially want to add into this section around DeFi? Because I don't want to go too deep on it because I might lose people, but I'm just highlighting that cryptocurrency is far more than the facade of, oh, it's Bitcoin and it's all these volatile assets that go up. It's trying to educate people on there's a lot more depth to it. So anything else that you want to add specifically within DeFi?
You've covered it off pretty well. I guess maybe the point to hammer home is it's still quite young and it's still, like you said, got a lot of risks attached. But the benefits are there that you don't have that third party in control, say a bank, that you can really do the whole financial aspect of borrowing and loaning by yourself through a trustless system, through protocols and computing power. I guess that's the really exciting thing about it. But it looks like the capital inflows are really coming for it. Banks are really getting on top of it as well because they need to evolve and adapt or they'll die. So it's really fascinating to see that aspect coming into play as well.
Absolutely. And do you know off the top of your head the total value locked up within DeFi platforms right now? I'm sure you probably know that figure.
Yeah, there's actually two answers. So there's $55 billion locked up currently in US dollars, and that's continuously going up month on month, give or take, depending on what Bitcoin's mood is on. But if you add in a lot more of the speculative side of things, so Binance Smart Chain, which we won't get in today, it's well over 100 billion. So the capital is there and it's coming.
Yeah, and what we have to also think about here, 100 billion, it's so insignificant. It is an absolute fraction of the daily money that's moved through traditional currencies right now. So if you're looking as a visionary forward, you can see the risk-reward ratio here of the potential to move into something where we're still at that very high level, insignificant financial standpoint in comparison to other markets, and we're only seeing that flow increase more and more. So just as I guess a mini conclusion to DeFi, it's your ability to lend your money into a pool which is all governed by protocols and systems, and then from that people can borrow from, or you can borrow yourself. You're a lender or a borrower and you know your outcome from that. And there's no third party involved. It's all run through a blockchain, which is just an incredible advancement and development. But it also opens people up to different, I guess, countries around the world where there's maybe geographical challenges in getting to a bank, or the banks are in a place of discrimination, which they absolutely are. And if you want to borrow money out, then if you put some collateral down, that's how you borrow, that's how you remove and eliminate the risk, then that's effectively how you can start to open yourself up to borrowing money as well, which is fantastic. It's a huge shift and a huge change within the markets, which is just incredible. It really, really is. I'll touch on NFTs as well, because I know that NFTs is just something that's been hyped a lot in the market right now. Honestly, people come up to me and they say, Joe, what do you know about NFTs? And I'm like, what do you know about crypto? I didn't know that you actually knew anything about crypto. And they say, I don't, but I know about NFTs because it's marketed everywhere right now. So it's important to be at the forefront of trends, you might say, and things that are happening. So Ethereum opened up a new trend of being able to allow new cryptocurrencies to develop. That was the ICO trend of 2017 into 2018. DeFi was really the trend that started in, well, it kind of did start in 2017, but it is really something that then transitioned more and more over the years. And now NFTs are the latest and greatest, you might say, of the newer things to the market. And NFT stands for non-fungible token. So it's your ability to have a token represent an asset, a real asset. So where it's being used is things like digital art right now. So it's to show that you are the authentic holder of the asset. You own it, and you can show that all through the blockchain, which is incredible. Every transaction's ever stored on the blockchain. So you can say, I am actually the legitimate owner of this. Another example of where this is kind of coming into play, Berkshire Hathaway own diamonds, and they use the blockchain for the verification and validation of the legitimacy to say this is the actual diamond, this is the legitimate one, because obviously there's a hell of a lot of fakes and copies of things happening from all over the world, not only from products, but also digital things as well. So where it's been, NFTs has been, again, and it's very new, and I think it's still developing, where NFTs is also used is moments in time. So they use the examples which some people will be able to relate to because they would have probably seen this through the marketing. And what I find in crypto is just people say the same shit. I'll say it, they hear it from one person and then they go and say it to other people. It's so cycled, it's quite funny. But the example that's being thrown around is Michael Jordan does a slam dunk in whatever final it was, however many years ago, and they've represented that on a card and said, this is the legitimate issue, kind of like a Pokemon card. This is the one legitimate Pokemon card that's out there right now. This is the slam dunk that's on this card, and this person owns it, and then you can sell it to someone else in the future. NFTs are also, and it's very confusing even for me because it's very new and it is a bit of a rabbit hole, and I'm still trying to really understand the value of certain things, but it's people give things value and that's what appreciates it. It's just the agreement upon something having value. That's what anything is. That's how we determine currency or anything in the world. It's also things like domain names. So there's a platform called Unstoppable Domains, and Unstoppable Domains, you can buy something like joe-crypto.crypto, which is actually my address. So that's equivalent to what you might say a BSB and account number for a bank account. So if someone said, Joe, what's your BSB and account number in crypto terms, they might say, what's your public key? And I would give them a long string of numbers and letters, which represents my part of the blockchain. So they could send me money to that address, where what Unstoppable Domains has created, you can link up all of these different blockchains or cryptocurrencies effectively that you have, like Bitcoin, Ethereum, or Ripple, or Stellar, or whatever it is. And you can send that all through to that one address. So that's almost like saying you can send Australian dollars, US dollars, yen, GBP, whatever it is, to one bank account. It's one bank account address, one BSB, one account code. So that is what effectively Unstoppable Domains is allowed for. You can link up a number of different cryptocurrencies and send it all to one address. So this is an NFT because effectively it's still going to have value in the future. So the value of joe-crypto.crypto at some point in time, I paid $40 US for it, and I know that at some point in the near future, it's going to be worth a lot more than $40. So again, you're buying digital assets effectively that are represented by a token that you have full ownership of. I'll touch on, because that's still, and Sammy, do you have anything to add to that? Because I feel like it's not difficult to explain NFTs, but it kind of is wrapping your head around it as someone that's maybe new to it, and they're like a moment in time, tokenized ownership of it. It's all a bit, I guess, left of center for someone that's
it's so dynamic. Yeah, it's so dynamic. My opinion is, and guys as well, we are learning this every single day. Something new pops up in NFTs. We're like, wow, I didn't know that was even a use case or even possible. I think it is here to stay, absolutely. And you can see the applications through music and gaming, particularly. Some of the other speculations are really interesting. People think it has value. I mean, that's up for your own opinion. But there also are some questions I still have, especially with the NBA Top Shots, which Joe was alluding to, about the moments in time where you technically own a highlight or a video in time. I still have some licensing concerns over that? Like, are you actually owning that from the, say, ESPN, the sports provider that took the footage? Some things are still a bit ambiguous for me, and I want to learn more. And art, it is in the eye of the beholder, but digital art, you display it on your desktop or in a virtual world. That's where NFTs are really opening minds, and you really do have to wrap your head around it, because it is really based for augmented reality as well, and virtual reality, where potentially if you open up your phone, you order Uber Eats, potentially you could have your Oculus Rift or your virtual reality goggles on in the future. Who knows how elaborate they become. You effectively walk into a restaurant in virtual reality or a food court, and you look at the menu, you look at the food, you pretty much see it, but you can't taste it. And you can just order through virtual or augmented reality through NFTs. So you start to see this kind of stuff happening, and it's mind blowing. But like all crypto, I guess you want to say hype cycles or new fads that come along, and I do think NFTs are really in that bubble-ish phase. You do need to see a bit of a flush. You need to see all these ideas and potential speculative things with no value or projects that aren't going to go anywhere. You do want to see that eventually go through a phase where the good projects remain, and all the trash is taken out, basically, like we saw with the ICO boom. So that's probably what I want to add to it.
Yeah, absolutely. And it's one thing to be very mindful that every session or every cycle that we go through these rapid cycles, because there is absolutely a big transition between the value. And sometimes if you look at anything, there's 5 stages of a cycle. The first is inception, and then we go through the second, which is more of a discovery. And then the third is kind of a realization that, hold on a second, we're overvaluing a certain asset or whatever it is, and does it actually have this value? And that's where we start to get the questioning, and that's where you get the sell-off. And then over, I guess, stage 4 is really where you start to say, hold on a second, let's build and develop on this, because there's some great technology here that we can advance. Then you go into stage 5 again, which is where we have a big drive up in terms of price again, because we've developed and reiterated from. And you only have to go and look at the dot-com boom. It's not just in crypto. Go and look at the dot-com boom of what happened in 2000. Everyone looked at it saying, holy shit, look at all of these things. And everyone got really excited. And then they're like, hold on a second, what is going on here? This is completely overvalued. And there was a huge sell-off. And then that's when all the real work started to happen. All the real business was developing on top of, and that's why your Amazons and your Microsoft and whoever have been there, or more so your Amazon, I would say, as an example, have been there and stood the test of time, and look how they've developed and created from. I think Jeff Bezos, what he's achieved over there is mind-blowing, and it's no different to what has happened within cryptocurrencies, the constant development and improvements and iterations of, because there's certainly challenges. If you look at Bitcoin, one of the biggest challenges that Bitcoin has is the scalability, the amount of transactions that it can do per second. And the challenge of that is that it's, as more people use it, the network is slowing down. So they created things like the Lightning Network to try and get things off of the blockchain and do transactions there, multiple transactions, and then link it back into the blockchain to avoid these challenges. So there's so much development on that level, which has been really beneficial as well, and developments just generally within the space. The other thing that I will say as well, I just want to say one more thing before I do open up to a Q&A. We're moving into what I would call a tokenization economy, where we're starting to tokenize everything. And basically that means you can have cryptocurrency tokens that represent an asset. A really easy example to understand right now, and something that's becoming more and more prevalent. Right now, Sam explained an example that most people can't afford a property. They can't afford a property because the disparity between someone's salary and the price of property has gone insane. And there are charts that actually highlight this. So people can't get into the market right now because they can't get the deposit together in order to afford it. So what they're starting to do is, if you've got $1 million house, they will turn that $1 million house into 1 million tokens. And you can purchase a certain amount of tokens which will represent your share of that property. And from there, that means you don't have to own the whole thing. You can own a fraction of, And that gives you the ability to still participate as a property owner from an investment perspective without having the ownership of the whole thing. But imagine trying to sell a property right now. I live in Brisbane, and I tell you, properties are going extremely quick, with the thought that the Olympics is going to be won, and look what happened to Sydney. So it's a good place to buy property, absolutely. So property is moving quickly, but it still takes 3 to 6 months really to process from one ownership to the other, where in terms of if you're tokenizing it, as long as there's someone to buy, you can sell that token straight away. And there are platforms that are doing this right now, which you can Google, more so in the US, but it is becoming more prevalent now in Australia. So it's just opening up different opportunities to invest into markets that most people would have never had access to before. Art is another great example. The NFTs, owning a certain token that represents the art. You might not be able to afford the entire art piece, but you can own a token that represents a part of, and the value of the art will increase. Therefore, the value of your token increases as well. So it's just incredible, the transition that we're going through on so many different levels. And for anyone kind of listening to this, if you're newer to it, I would really invite you to take this session and really listen to it and say, hold on a second, wow, I didn't realize that it was maybe this developed, and I really need to start maybe paying a bit more attention and removing myself from the mainstream media that's very confused around what's happening, and start to dig deeper into the actual reality of what's going on, but also the understanding of what's happening in traditional markets and the impact of printing money, cutting interest rates, giving away money for free, because they're the three things that you really do to try and re-stimulate an economy, which we can see isn't working too well right now. So I won't go on too much more, because I'm just conscious firstly of time, and that obviously I do want to open up to questions. Just before I do that, Sammy, is there anything that you want to round off before we do open up to Q&As here, buddy?
No, mate, I think you covered it off really well. Did you want to discuss any of the risks, or we're going to get to that soon?
Yeah, I guess we can certainly touch on risks as well. I think there's certainly value in that, because I don't want people to come on here and think that I'm trying to brainwash you into investing in crypto, because I assure you I'm not. I'm just trying to educate you from our perspective of what we've seen, but our analysis is all based on data rather than what we hear. It is two very, very different things, a very different approach, and one gets results and one gets you lost in noise. What I would say in terms of risks when you are investing, I think one of the biggest things for most people, for the first time ever in history, you've been given the ability to have full responsibility and ownership of your own money, effectively. Because money is just the currency is just a concept of money. So the first time you're having that ownership, and with that ownership comes great responsibility. And there's also challenges that you can go through, like sending your crypto to the wrong address, the wrong BSB and account number. If you do that, then the money is no longer accessible. There's no hotline to call. You need to understand how to store and manage your assets in the best way. And if you don't store and manage your assets in the best way and understand the process of, then you can lose access, which I'm sure you've all seen some horror stories. You can lose access to your crypto real quick, which obviously isn't a thing that you want to be involved in as well. There's so many scams in this space that are all around the cryptocurrencies, not the cryptocurrencies themselves. And this is something that you need to be aware of. They're getting very advanced in terms of scammers right now, unfortunately. And the latest kind of trend is where they will copy an entire website and then somehow hack the platform, upload their own website, and then they'll say, here's a free giveaway. An example of this, one of our clients he had $50,000 US taken from him 2 days ago because of this exact scam. They created a website, They built it out, and then they said, we're giving away free Ethereum, 2.5 Ethereum. So he went, sure, I'll take that. And unfortunately, it says put in your recovery phrase or your private key, which he did, which is something that we always inform. You should never, ever put your private key or your recovery phrase, which is something that you're given when you set up your wallet. You should never put that online. That's kind of like giving someone your bank card and the CVC and saying, here, go and spend my money. That's the equivalent, but unfortunately, people aren't as informed right now. So that's why we run the education process, to give people that insight and guidance on this. So the other things that we have to understand, that there are those risks, and you have to be educated in order to really understand what you're doing, so you don't do anything wrong, because as I said, it is easy to kind of lose access to your money real quick in this space, not only through scams, but just through pure ignorance and not getting educated of what you're doing in the process. I would also say risks is not understanding investment cycles. So the risk of, you can go out and buy Bitcoin today, but how do you know Bitcoin is not going to diminish in value like it did? After 2017 through 2018, Bitcoin lost 87% of its value through 364 days. So it's understanding how do you minimize your risk from an investment strategy perspective as well, knowing when to simply buy and sell in the market. How do you eliminate risk from analyzing an opportunity to know what you're actually investing into? As an example, if you go and buy a property right now as an investment, you don't say, I'll scroll through realestate.com.au and sure, I like the look of that house, I'll buy that. You would want to do a lot more due diligence and say, is this a good area? Does it have the facilities, schools, parks, shopping centers, whatever it is, before you even start looking at properties themselves. And it's no different within crypto. You want to analyze and understand what you're actually investing into to remove and eliminate a lot of the risk and exposure, so you don't invest into an asset that's going to go nowhere, because there's no way that, if you think about it, in the first 12 months, I think there's a statistic that something like 50% of businesses fail. Within the first 12 months in crypto, it's probably even more than that. So we want to know that we're investing into cryptocurrencies that are actually going to get somewhere and not kind of go off track, is what I would say. Sammy, anything else that you want to add to risks here, buddy?
Potentially just, I guess when a lot of people start in this space as well, they don't go to the right place. Obviously have a plan, seek out the correct advice and research. Don't just listen to your friends or the guy at the gym saying, you know, buy this token, it's going to really rock it. Probably just a tip, it's start with Bitcoin first and then learn about Ethereum. Learn those two first back to front, and then you'll feel confident potentially venturing out a little bit further, because a lot of people and a lot of new investors have unit bias. They look at the coin market cap, which is an index of, say, all the market caps of every single crypto. They look at Bitcoin, they look at Ethereum, they think, oh, gee, look at those prices. I'm not going to buy that. It's too expensive. But they're that price for a reason. We've got to remember that. And they start to look a bit further down. They maybe see a Dogecoin at 60 cents or 6 cents, whatever it is at the moment. And then they want to look at something like that might give them a huge return. Now, they might make money through that, but there's a bit of unit bias in the fact that, they look for those really quick, fast reward gains when they haven't done the research associated with that. So that's probably what I want to add. And potentially just security around, before you get in the market, you need to know the difference between a software wallet and a hardware wallet, how to protect yourself when you're entering this space, just in storage. Before you buy anything in cryptocurrency, you want to know back to front the steps on how to secure your cryptocurrency 100%.
Yeah, absolutely. And just to add to that, what I always say to people, before you invest a single dollar in the market, you want to know all your entry and exit points. Otherwise, you get taken by the tidal wave of emotion of when you watch your portfolio go from 100 grand to 200 grand in the space of a week. And it's like, holy shit, what do I do? And you get excited. Should I sell? Should I buy more? What should I do? And then all of a sudden it corrects 50% the next week. And then you're like, oh my God, I should have sold. What am I doing? I'll minimize my risk. I find about 80% of the market is in a reactional emotional state to what happens in the pricing, and that will cost you a lot of money. So one of the first pillars of what we train people on is the investment psychology method. So it's really understanding how to interact with the market and get the most value out of it for yourself as well. So yeah, hopefully that helps. I think we'll pass over as well now to any questions that anyone has before we round it off, because I know that we've been on the line for an amount of time now. So yeah, I don't want this to go too long, but I wanted to share things that I thought might be useful and engaging for people through the process as well. So yeah, any questions, feel free if you don't want to speak, and then you can just write them in the chats and I can read them out. If you feel confident, then please go ahead and speak. Just make sure you unmute your microphone and we'll listen. Unless, oh, we've got a hand from Rajil. Fire away, buddy.
Hi. Thank you for your speech. It was really inspiring. I just wanted to know that since cryptocurrency is not regularized and government can't track what's going on, how do you think that it will affect the economy in terms of taxation and all this stuff?
Yeah, interesting question. So I would say regulation and taxation are two different things here, because cryptocurrency is absolutely taxed. Right now, it's treated as a capital gain tax, the same as property. Within Australia, we have a 50% discount after the first 12 months of holding the asset. So instead of paying 50% on your gains, you pay 25% as an example. So it's definitely taxed. Trust me, the ATO won't allow any asset to not be taxed, and they're using blockchain technology themselves. So tax is slightly different. In terms of regulation, there is a lot of regulation that's come into the space, which has been a good thing, because it's then opened up for traditional investors to say, okay, I can see that there's a lot lower risk in this, and that they've then been able to transition maybe an investment fund across to have an exposure to crypto. So absolutely there's benefit of the regulation that's come into play. ASIC, Australian Securities Investment Commission, in order to be an exchange that's operating in Australia, an exchange is quite simply a place that you can buy and sell. You need to be compliant with ASIC and their regulations. So there are regulations not only within crypto, but the businesses around crypto right now to protect the investor, which is obviously a very important thing. It's still a very new space, so there is new regulation that will be implemented that will be beneficial. There's also a lot of talk in the market of regulation that maybe won't be as beneficial as well, and that there's talk of that trying to maybe slow down the innovation and creation of the space, which can be quite detrimental too. So I think some form of regulation is absolutely healthy, and we're seeing more and more of that play out. Too much regulation isn't a good thing, because it's kind of like you're trying to tame a wild horse, you might say. That wild horse is supposed to run free. That's its primordial thing. That's what it should do. We're trying to tame it, and if you over-tame it, it's not necessarily going to be a good thing. So we want to have some level of let it run free, but also at the same time, let it run free, but maybe put a fence around it so it doesn't start plowing all the kids over in the park. It is probably the way to explain it. I come up with some random analogies, so please bear with me, but sometimes it helps people to understand. Sammy, anything that you want to add in terms of regulation?
Yeah, just quickly, probably contrary to a lot of belief, regulation's actually moving in a very positive aspect in terms of support within governments and key regulators. We often look to the US as a bit of a guidepost to what's going to happen elsewhere in the Western world, financial world. And right now, the SEC, the new chair, actually taught about blockchain and Bitcoin at MIT. He's now the chair of the SEC. The chairwoman of the SEC actually is an advocate for a Bitcoin ETF. So that will bring in a lot more capital. And you've got, I think, around about 3 or 4 US sitting senators currently who are pro-Bitcoin as well. And there's an untold amount of congressmen who are crypto friendly. So you can see it's just growing. The entrenchment grows with every crypto cycle. And as the benefits come to light, I foresee it will only grow, and in a more positive situation, especially when geopolitical risks start to come into the fore.
Yeah, awesome. I'll go to a couple of quick questions here on the chat. So I've got Madhu. So a question, is your concept of tokenization similar to the shares floated by like a stock as example? Absolutely. So the difference between tokenization is backed by a real asset as such. So shares are backed by a share in the company, it's a real asset. Tokenization is backed by maybe a physical asset or a digital, it doesn't matter, but it's backed by a real asset. So absolutely, that's a great example. And yes, to that, also around the diamonds and ownerships, how are the diamonds authenticated, not for being fake, etc., not to be done physically. So they would have to verify and validate that it is an authentic diamond to begin with, and then they would enter that onto the blockchain to validate and say, yes, this is the authentic diamond, and that every transaction is held on the blockchain. So effectively, the challenge here is if the wrong information is put on the blockchain, the wrong information stays on the blockchain. So it's important that it's done properly from the start. And I'll give an expansion of that as well, because I know an asset like, a crypto like VE chain is being used for supply chain management. And it's just to ensure the authenticity of a product. So where this is really viable, right now, I'll give you a real harsh but a true example. China went ahead and started creating all these baby formulas where they were dumping plastic into them and it was killing kids. That is a scary reality. Now, if you're able to put in the blockchain and say, this is where the product came from, then you can validate back to the origin of inception and say, cool, this is where the product came from. The same with the watermelon, was it rock melon crisis? I think that was happening across Australia. They didn't know where the rock melons were coming from. It wasn't uploaded on a blockchain. So what they did is just shut all the rock melons down, and all these farmers were in despair, losing all their money, where you could, and their crops, they literally had to destroy their crops, which is insane for a farmer. If you had that validated on the blockchain and said, cool, the origin of inception of these bad rock melons is coming from this farm right here, let's contain that and shut that farm down rather than shutting everything down. So really, really valid within that. A question here related to NFTs. And you're going to have to bear with me here because I'm still learning about it. So Sam, I might lean on your expertise here. So how can we authenticate the originality of an asset with an NFT? So I guess that would be very similar to the process of a diamond, understanding the origin and the creator of that, of the inception and the creator of that digital art, that moment in time, whatever it is. They're the ones that would tokenize it. They're the ones that would put it on the blockchain, and you're effectively buying a token from them to represent that. That's my understanding of that. Sammy, anything that you want to add to that?
Yeah, I'm sure it's the original creator or the person that owns the actual asset would have to mint that asset or wrap it into a token. They'd have to put it onto the blockchain so everyone can see they are the original creators of that token. It's pegged to that asset. Again, it's a bit ambiguous on how all that works in terms of licensing and, you know, who is the original owner. But if that token's pegged to that asset, you can see that in perpetuity.
Certainly, and with digital art, it's very clear who the owner is of that. But if you think of all of the fake art that's out there, copies of art is a huge industry right now, like fakes of selling as the real thing. So it's a fantastic way to legitimize and authenticate that this is the legitimate product, this is the actual piece of art or digital art or whatever it is, because now art's not really like people are buying digital art, not even the physical forms anymore. It's a shame that our NFT expert in the team, Tristan, isn't here because he could talk about NFTs until you guys got bored. So he buys
midnight.
Yeah, he buys NFTs himself. He shows us bloody holograms of Batman and all these crazy things that he's got. So it's he had some digital art that he then got etched onto a metal plaque. So that, like, it's just incredible what you can do with it. But again, it's not my thing. I care not for this digital art craze, but I'm sure there's value in it because people are investing in it.
Just on that, Joe, I think potentially when you're pegging real world assets to get a trusted system, you're going to have to eventually maybe have a centralized NFT server that's, you know, potentially across borders, that everyone acknowledges as the standard. So potentially you have an art NFT, you know, global server where everyone trusts that is the original token of that piece of art, if you get my drift, you know, because
Yeah.
anyone can mint anything on Ethereum right now. So, you know, there needs to be some checks and balances, and that's where that traditional or, you know, current out there in the world currently, when we're moving into this blockchain space, there's going to be some meeting there and some compromise. So we're going to have to see how that rolls.
Yeah, absolutely. And that's what the crypto space is so fast evolving in different ways. Just quickly, I had a hand up here from Shipra. If you've got a question, mate, and we'll probably take one or two more. So if you've got a burning question, please get ready to ask it. But Shipra, fire away, buddy.
Okay, thank you so much, Joe and Sam. I have two questions here. First thing is because I had a chat with an Australian exporter who actually placed his beef export to China on blockchain, because they got to know that all beef in China is being sold as Australian beef, regardless, you know, the production, where it is being produced. So doesn't it bound the NFTs? I would say the originator of the blockchain should be the producer of the product. I mean, because like you said, the authentication of the asset is very important, and it has to be done carefully.
Yeah, absolutely. So the person that would create the digital art, the moment in time, whatever it is, they're the ones that would effectively mint it and tokenize it into an NFT. So the difference between this, so the guys in China that are getting meat from Australia, all they're using is something like VE chain as an example, the supply chain to say this is the origin and we can track it the entire way through to say, yes, this is the legitimate product at the end. The only problem that you have, especially with something like beef, and I remember sitting on a chat that I did, and someone turned around and said, like, it's great VE chains, everything, and you can do all of these things in terms of track the supply chain. But what happens if, let's say, meat goes outside of a certain temperature control, and there's a thermostat that's recording everything straight into the blockchain? What's to say there's not human manipulation that can come in and say, cool, let's just chuck an ice block on top of the thermostat and reduce the temperature down? So I think there's still, within supply chain in particular, I think it's still open for human error. And that for me is why I don't fully believe yet in a lot of the supply chain things, but I definitely think that there is value in understanding the inception. A thing in, like, I guess the agriculture and restaurant world is called paddock to plate. So understanding where did it actually come from, understanding all the way through the transition to it ending up on the plate in front of you, which sounds pretty sick, but you could talk about it in grain or whatever sense. Understanding the process of that and delivery to the plate in front of you. So it certainly helps you to understand the origin of the content, whatever it is, understand and track the whole way through, and then be able to understand where it was delivered. I think it was Commonwealth Bank, correct me if I'm wrong here, Sam, that did a blockchain experiment a long time ago, maybe 2 years ago, with, I think it was a million almonds, and they tracked it going around the world, and everything was held within the blockchain to validate and authenticate it. I don't know, Sam, if you're up to speed on that one. I remember it a long time ago.
Oh, I haven't heard of that, man. I'm actually Googling it right now.
Yeah. I don't know if it was, I'm sure it wasn't Commonwealth Bank, but it was one of the large financial institutions that did it, which was a really, I guess, big surprise of that. Awesome. And any other questions? I've seen there's one pop up in the chats. I'll do this one and then one more. So if you want to have a question answered, maybe raise your hand right now and I'll come to you next. So Sasha, what's your opinion of Australian university offerings in regards to teaching blockchain, IT, and business to students? What's my opinion of the offerings? That there's not many there. And I don't want to name universities that are doing it, because I know that there are universities that are doing it, because I don't want to sell against Fed Uni, because I think you guys are doing a great job in terms of the offering and the way that you're trying to integrate this. I think it's incredible. But I know that there are universities that are offering different programs out there, and they're also starting to transition into different things like becoming a blockchain consultant, becoming a blockchain developer. So there is the offering of it. Do I think that we're going to be slightly behind? We always are. We're in this island that's far removed from the rest of the world, and it's just the way that it is. But what I would say is that I do think that we're quite a progressive and forward-thinking country. So I do think that we are accepting and developing a lot of this quicker than what maybe some larger bureaucracies will be slowing down and preventing. So I don't have an opinion, because I haven't studied it at university, is what I would say, quite simply. But what I would say is I know that it's becoming more and more progressive within universities, which to me is just a fantastic thing. How we're not really integrating this more into society right now blows my mind, because there's so much opportunity. And if I was a university person that sorted the courses, man, this would be at the top of the list, because I know there's so many millennials right now saying, I want to know about blockchain, I want to know about crypto, I want to know how I can have a significant impact on the world, because the millennial generation is far different to my generation or the generation before me, which were more capitalistic and very different. Now we're going through one of the biggest transferences also of consciousness that we've ever experienced, certainly in my lifetime. So I think the younger generations get this well ahead of what we do for a lot of the time, and we want to facilitate the hell out of them with everything that we can, because they're the guys that are going to be creating our future, and we know that blockchain and crypto is clearly here to stay. So that's my observation. I hate to share my opinion on stuff, because my opinions are relevant. It's just my observation. Any other questions before we wrap up here, guys? All right.
I think no questions. So, Joyce, I think there is no. This is a direct question to me. Can we have a recording of this meeting?
Yes, I did record it for that purpose. I thought it would be great for you to play to the uni students, whatever you want to do. So absolutely, I'll upload it onto Vimeo, and then I'll share the link with you.
Thank you.
You're welcome, buddy. Awesome. Well, I really appreciate your time. It's great to have everyone on here and have the conversation with people, and hopefully there's been some value shared on here. I want to say for me and Sam, we're always grateful that we are in the position that we're in, and we've chosen this path, and that we can help and educate other people. Sammy, anything that you want to add?
No, other than that, it's a really exciting space to be a part of. And if you want to learn more about it, I do hope universities get a bit more involved. If you're interested in gaming, programming, coding, I think it's going to be the future. You can see the trend. So.
Yeah, absolutely. And I'm not going to deny that obviously we offer a service over here, which is an education service as well. So you can absolutely go and check that out. I can share links here with Salim on a free playbook. We have a free training series that I've done more about the 5 pillars that we do as well. So if anyone does have any kind of curiosity to learn more about it, then we've got free content right now that you can get into it as well. Awesome. Salim, anything that you want to say to wrap up, buddy?
Sorry?
Anything that you want to share to wrap up?
Yes, just thank you so much for such a wonderful talk and enhancing our understanding about blockchain and cryptocurrency and what is hype and reality. I think everyone has enjoyed and has a great learning. Thank you so much.
Awesome.
My pleasure.
Well, yeah, appreciate your time, and thanks for giving us the opportunity to share some insight with you guys as well. So all the best, buddy, and chat soon.